financial messages are dropped. I came here in this institute and my network was gone. There are 5-6 network providers in the country. I am a member of Airtel. The moment my car entered this premises, network was gone. After hectic efforts, I could somehow get some connection. Forget about message dropping. There are pockets within the country where the network is not reaching. What kind of digital financial inclusion you are talking about if this is the story? This needs an improvement, but then if your country is trying to do that, this is one more area where you have to ensure that the mobile network providers are healthy and willing to invest in technology. If they are not willing to invest in technology, you can never reach and do this. Banks alone cannot do this. You have to ensure that the government of India did in 2012-2013, where the mobile network providers were involved in the technological things which the government of India wanted to do. We have reached a stage after 8 years where we can tom-tom about this, that we are one of the best. We are globally the best in terms of digital transactions. We have overtaken US. But this is because of the infrastructure that has been built. But therefore, these risks, you have to ensure that these risks do not occur. I do not know of the topography of Ethiopia, but that's how you will have to decide. Excess pockets, less pockets, everywhere. You will have certain areas where there is huge population, you will have certain areas where the population is less. The challenge is to provide service in low populated areas where lesser number of people are living, because there is inverse relationship between the cost of capital and the earnings that the technology company can make. Lack of spread of network in remote areas. I mean, this is the point I was talking, causing disruptions. Forget about the remote areas. Within city, these disruptions are there. Within city. Now India is going to face a lot of havoc. 5G is being rolled out tomorrow onwards in certain pockets. We are not getting 4G. What is the question of 5G? Where is the question of 5G? You will get 4G in select metro towns in the country. In all other areas, your network icon will show 4G, but the speed that you get is that of 2G. Now, if this is happening in India, you have to imagine what you need to do. I need not talk about it, but that's how the thing should be. Literacy level. I am not sure of the literacy level of your population. Good. It's a good literacy level. Now, if the literacy level is good and improving consistently.
Sorry, sir.
Yeah.
Agent-related risk.
Agent-related risk is due to new providers offering services. Agent is, I told you, there are 10 lakh agents working in the BFSI sector in India. Now, this agent is normally engaged in areas where the banks are not finding it easy to reach. Banks are unable to reach. And what this agent does is that all the products of savings or loans delivers at your home on a hilltop. The villages are on hilltop or in jungles. There he goes and delivers. Now this agent can cheat the poor family. So you need agent who is above integrity, so that you can, despite having this digital inclusion, this can happen. For example, in my country, what will happen? I got a unit where he can accept cash for the credit of his savings account. The customer pays him 5,000 rupees, he deposits only 4,000 rupees. That's the risk. That's the risk here. Despite this risk, we should go for digital inclusion for the simple reason the benefits that are available to the service providers and that are available to the customers are great. With this, it's quite possible that the case is really strong for appropriate regulation and supervision. I'm talking of my country for the simple reason we still have regulatory issues in terms of the financial services which are being digitally delivered. There are very few laws which actually cover this. But the laws will evolve. First, the product has to be evolved. Once you evolve the product and services, the laws can be evolved. We are in that typical process where the product and delivery system is stabilizing, but the regulation is falling behind. A day before yesterday only, there was one committee which was set up by Reserve Bank of India to identify the rules for delivering digitally all the products in the country. What we have done, in 2014, India has embarked on one of the most ambitious financial inclusion initiatives ever since anywhere in the world, bringing over 330 million people into formal financial sector. The expansion of digital financial inclusion in India has been driven by significant innovation in both public and private sectors. The private sectors have been involved in this financial inclusion very aggressively. You have a lot of service providers, for example, UPI, Unified Payment Interface, which exists in India, is parallelly used by at least 5 to 6 companies to deliver more. You have Paytm, you have Google Pay, you have WhatsApp, you name it. They are all there. It is that is the third generation reform that has taken place in this particular area. But then private sector is playing a key part because India is a huge market. So every foreign company which is into the technology driven services, they find that yes, here they can make money, because India is a business of volumes. You can keep the values lower, still you make millions. And then we started, of course, prior to Jan Dhan, there was a common scheme, Swadhan Yojana, or all several schemes were there where the banks were forced to open up accounts massively. But then Jan Dhan has done huge wonders during the last 7 or 8 years. This Jan Dhan Yojana, or the scheme as we call it, PMJDY, the majority of Indian citizens are having a bank account. Still, as I said, there are roughly around 27-28 crore people who do not have access to this. But the idea of having this was simple. Whenever government wanted to give economic benefits to the population of the country below a threshold level, earlier it was pushed through various agencies. And it was said that if the government of India grants 1 rupees for a common person, he will get only 16 paise. Out of $100 given by government of India, he will get only $16. The rest of the $84 would be eaten up by the middleman. This DBT has enabled that the beneficiary will get full value, full $100. So this is the great move by the government of India, of course supported by the entire industry, and then linking the biometric identification through Aadhaar scheme and mobile numbers. The aim is to leapfrog more traditional methods. Now we are working on how to improve the existing products. You need to work on how to introduce basic concept. Once you do that, you can keep on improving. Maybe a decade will go for Ethiopia before they really implement the basic fundas. There will be several players who will have to be involved in this entire process. Network operators, financial structure, the 3-tier financial institutions, mobile network operators. In fact, you will not believe the Reserve Bank of India allowed the mobile operators to open payment banks. That it did not survive because it did not get the volume that it wanted. You say, remember we had Airtel Payment Bank. So mobile network operators were allowed to open payment banks. Wallets by PTM. Wallets is something where you keep money and use that wallet to make the payment online.
Even Amazon is there.
Amazon is there. A small finance bank is a new idea that we are working on, because we still feel that we have to have the infrastructure reaching to the lowest of the population, that we have not been able to reach as an India.
Sorry, sir.
Yeah, please.
The previous slide. I mean,
Oh,
yeah.
this one?
No, not the previous one.
Sorry.
Yeah. No. Yeah, this one.
Okay.
About the growth of MFIs into small finance banks.
Mm-hmm.
It is a very recent experience in our case.
Please go ahead.
Some microfinance institutions grew to banks. Actually, not small finance banks, they are just grew into banks like us, like any commercial bank. In fact, keeping the microfinancing services as one wing. But there is a debate that they are deviating from their very nature. As lots of gaps are there for microfinancing, they are coming to compete or to line with the commercial banks. Maybe how is it? What do you comment from your such?
Now, I have understood your question. Let me rephrase the question. You want to understand the microfinancial institutions, how they want to grow big or divert to other banking areas. One. Is that the question?
Is it fair in developing?
Oh, let's not talk of philosophy. We'll spend an entire day on talking philosophically on this. What is important is this: microfinance institutions, as far as Indian experiment is concerned, microfinancing institutions have played a key role in replacing the unregulated money lending network that existed within the country, our country. What it has done, it has replaced the money lender. We used to call him what do you call, क्या कहते हैं उसको, पठान नहीं कहते, क्या कहते हैं उसको, मनी लेंडर को क्या कहते हैं हिंदी में? महाजन. Of course, they will not understand the terminology that I am trying to talk, but there was a in village there is always one rich person who will help all the poor and eat their all lands and properties. The story is similar. Here that particular person who is a rich person we used to call Mahajan. Now these margins or this particular rich persons are replaced by microfinance institutions. A farmer would go and buy at an interest rate huge, 50% per annum. So the microfinance institutions in India, especially the eastern part of India, that is Andhra Pradesh, Telangana, Orissa, Bengal, all these areas, the microfinance institutions have done wonders. They were brought under regulation in 1997 via NBFC route, non-banking financial companies. That was way back in 1997. Now, bringing them into regulation was one part, but then Reserve Bank of India did not control their business activities. So an individual who was going to the village's richest person and taking money freely, quickly at the rate of 50%, these microfinance institutions started giving him money at the rate of 24%, half of that rate. Still the farmer is poor because this is stiff rate. If the farmer comes to a city or a metro area, he will get money at the rate of 9 or 10%. But in village, if he borrows, he has to pay interest at the rate of 20% or 24%. These microfinancial institutions grew strongly over a period of time, very strong. And then their ambition shifted to other activities. Like in India, we have cooperative banks. Cooperative banks are by the people, for the people, democratically elected board, doing banking professionally. But in terms of making profit for the last 20 years, they migrated from their basic objective of helping small man. These cooperative institutions in the country were formed to help the community people, to help the needy person. They lost this objective. in the frenzy to grow business, make profit. So what was the objective of these organizations? The objective of these organizations was simple, but money made them blind, and there they digressed from the original objective. Now the course correction is going on in the country. The regulator of our country is now asking them to do a course correction where they have to virtually work like a small finance bank. All their activities are like that now. But this has to be done by a central bank. You have a National Bank of Ethiopia, started in 1964. That is doing the regulation. They have to look at this. Because microfinancial institutions in your country or in any country, if unregulated, can play havoc. Can play havoc with the lives of people the way it happened in the Eastern India, post-independence. So that's where you need to be more focused. That's the idea. How do I make it big here? Banda kidhar hai? You start the presentation. Okay. Good. You are brilliant here. Major challenges, I skipped couple of this is the slide which we are talking, right? This is the slide we were talking. The government of India has to prioritize on the story so that their financial layouts are focused on this digital identification and payment technology, on which the private sector can build. Public-private partnership is there in several such companies. This was a wonderful boost for the India. Are you aware of this story, India story? I will not take much of your time. I will explain in 2 minutes. India demonetized two of its major currencies, 500 rupees note and 1000 rupees note, because India suspected that terror funding was done through this. Point number one. Point number two, lot of money, unaccounted money, people had hoarded. And they demonetized it on 8th November 2016. All these notes were demonetized. People were asked to submit all their currency into the bank account, and then after depositing the bank account, Government of India could ask where from this money has come, what is the source of money. So they had that fear. If I deposit my entire money, I will have to show source. Now if I don't show source, what was the simple idea that government wanted? You pay 30% tax, finish it off, we will not ask you anything. give us 30% tax, matter is over. We had around that time some 14 lakh crore currency in 500 and 1000 rupees note. 14 lakh and then multiply by the denomination. 14 lakh, 14,000 or 46,000, that was the estimated number of currency available with the Indian public, of which roughly around 16,000 notes did not come back. Okay. So the people started asking, why the hell did you do this? If only for 16,000 notes you have not been able to come back, why the hell did you do this? Because we were worried about our neighbors. Our neighbors were printing our currency for terror funding. And we basically there was also one rumor, I say, India has got 4 printing facilities. In 4 centers the Indian notes are printed. Of these 4 centers, I will not tell you the name. One center was managed by Government of India and the other 3 centers were managed by Reserve Bank of India. It is believed or it is said that the center which was owned by Government of India printed certain currencies which is not in the balance sheet of Reserve Bank of India. What is the volume? Nobody knows, it's a guesswork. Why our Prime Minister is a villain? Because of this. Why there is a political turmoil in every state? Because of this. All corrupt politicians were denuded. You cannot share, you cannot tell, you simply have to get yourself screwed left, right, center. Now, this gave a lot of boost to the digital payment infrastructure, and India suddenly migrated, entire country suddenly migrated, quickly registering a 600% growth in digital payments. That was in 2016-17. And there is always a constant rumor that now doing around is that now we have got 2000 rupee note. That will now be demonetized. Because the 2000 rupee note and 500 rupee note are the largest store of value for the common people. But they are largest store of value for the election mechanism that goes on into the country. Let's not talk about that because that's a different subject. I can keep on talking on that with the data that has been published by Reserve Bank of India. Nothing of my own. This is also that I picked up from various official sites of NPCI and Reserve Bank of India. So whatever number that I am giving has got authenticity, and I got all the reports copies. I'll give it to Dr. Girish Mangli. If you want a copy, you can get the copies as well. I simply have consolidated what it exists. And then this was introduced, unified payment interface, which has grown from nothing to create or to overtake debit cards and prepaid wallets as the primary form of digital payments. UPI was created and is managed by NPCI. All banks are having a membership of NPCI. So when a customer hits a transaction from his mobile, it enters NPCI. Once it enters NPCI, it hit backs to the bank account where it is addressed. The system of the bank identifies, verifies whether the transaction is genuine, original, genuine. The amount is debited, remitted back to NPCI. NPCI again remit backs to the banker where the money is required to be remitted by the customer. This happens in nanoseconds. This happens in nanoseconds. So, with a blink of an eye, your money is remitted. Fish. This is the UPI that we are having, and Reserve Bank of India is taking a lot of initiative in this.
On the previous one, previous slide. As it works with the QR code, the UPI, because in that way that it's overtake the debit card, otherwise it's impossible.
QR code is there no, for remittances. It uses same mechanism, same track. QR code, you scan the QR and then you pick up a certain payment provider, put your password. The moment you put your password, you are connected to the NPCI network to your bank. So QR code saves your time on filling up your details or the receiver's details, either of it. QR code is becoming popular even with the small vendors. The person who is selling vegetables puts up his QR code. The mess is with the banker. Now this vegetable vendor is having a bank account with me. There will be entries like 5 rupees, 8 rupees, 15 rupees, 20 rupees, thousands of entries daily. And there are certain underbelly issues to such transactions. Initially, to encourage people to use this, the incentive was given. You do 50 transactions, we will give you 5 rupees. So what people used to do, they used to remit 1 rupee daily or 1 rupee 50 times, get 5 rupees free. So that is something that you need to work out, and that's the bad experiment of India. I should share with you. So the UPI is managed by NPCI. Do you have any other question on this? Major challenge is the viability of the agent networks, financial literacy, the design of appropriate products. India's diverse population. India has got 15 languages. There is a common platform. So 15 languages, they need an interactive platform. They are trying to make it as popular as possible, but then English knowledge up to the schooling is adequate to handle these transactions. What are the issues? There are thorns in India's initiative in digital financial inclusion. This is the issue. I do not know what happens in Ethiopia, but in India, customers come to branch. They don't have any work. Senior citizens, they will come, chat with the manager, sit with the manager, take a cup of tea and go home. This will eliminate. This is eliminating. So they are not comfortable. We want to come to your branch and we want to talk to you. If you do this, we will not be able to face each other. During COVID, people used to come to branch for filling of a passbook, depositing 100 rupees, withdrawing 50 rupees, because they could tell police, I have to go to bank. During COVID, there were restrictions on movement, but that was used by these people, an alibi, to visit bank and come out. They are not comfortable. The human touch point still remains. For a younger generation of 53-54%, they are happy. They don't want to see the face of a banker. They don't want to. Bankers are an avoidable nuisance in the country. So the younger generation does it very effectively. Younger generation is in a position to do that. But then the moment you go faceless, you get a different kind of discomfort that cannot be explained. It exists, especially in a senior population, that exists. But then if at all you want to do an inclusion, you cannot have cake and eat it too. You must ensure inclusion, you need to do that.
They are going to put some fees for that. If you want to visit bank, you have to pay some charges.
Yeah, true.
I think that nobody should visit bank. They are make so digitalized everything.
See, we had, sir, आपको याद होगा, we had one bank, Global Trust Bank, which was then merged with some other bank, I do not know, ICICI Bank. Global Trust Bank was the first bank to introduce a charge on physical transaction. Now, if you come to the bank and withdraw, say 500 rupees, you will be charged 10 rupees. But if you withdraw from ATM, no charge. So that's how the push towards the technology was done. Now, this is an experiment. RBI didn't like it. RBI punished Global Trust Bank for doing this kind of digital push. So you cannot put a gun here and nothing doing, do this. That is not possible. That is simply not possible. You have to convince.
Earlier, the banks are used to very big, but now they are very small areas they can manage because of digitalization.
Yes, very true, very true. The need for trust and understanding of how to use these services will continue to require interaction with human beings.
So in this one, I think in India there is neobanks. So how they are managing the human interaction?
New bank is only a theoretical concept that is under discussion. Why I tell you? Why it is under discussion? For the simple reason. Banks themselves are not comfortable. If you want to know about neobank, there are a lot of seminars which are happening in India on neobank. Huge, large number. I attended one of these seminars on a panel discussion. I was there. I said, as long as the senior citizens population of 40% or 43%, whatever it exists, unless it's come down to 10%, you cannot have neobank in India. Or neobank only at metro centers. Only at metro centers. You got 5 metro centers, you have a neobank, no issues. Where the digital penetration is huge, you can do this. My bank has a palm top banking, that is mobile banking, which is virtually offering you 26, 27. My bank बहुत छोटा है. My bank is very small. It's a 6,000 crore bank. Still, it's a very, very small. Compared to other big banks, where they are not venturing out. State Bank of India started one application for their popular mobile banking services. They call it as YONO. This YONO has become hugely popular with younger generation. But they are still not calling it a neobank for the simple reason they continue to have brick and mortar banking and this digital platform also they are having both. It will run parallelly for another 25 to 30 years. The brick and mortar banking will not go away like the France. France is doing away with brick and mortar banking. BNP Paribas has shut down almost 400 branches in France. One of the global leader in banks. They don't have offices, they have application. Use it. Period. So banking services are going to be faceless, but for your country and my country, it will be almost 50 years before that happens. You will not be, perhaps you will be there, but I will not be there to witness that. But you will be there to witness how it happens. Yeah. Aspiration of both rural and urban environments, the desire to try new digital products and continue to use them is closely linked with aspirational characteristics like wanting to grow a business. Now, if in rural India, they don't want banking facilities, they are rich. Kya karne ka? What to do? I don't want this mobile banking. I have nothing to ask for from any individual, so why do I do that? Still we should do this. Let me tell you why. The income and expenditure of this person, rather the income of this person is not mapped in the database of the country. It has to be mapped into the GDP. So our GDP is always at a discounted value, $232 billion. That is undervalued. How it is undervalued? 20% of India's population do not have an access to the bank. What about their income? They would be doing something to survive, right? Whatever it is, there is income. And therefore, that is one of the thorns which we feel we are facing. Product design is important, understand, and underrated in India. Even in India, it is still underrated. Product design is prototype, standard. You want to have a deposit account, you have 4 types. You want to have a loan, you have 4 methods. What are the 4 methods? Term loan, cash credit, overdraft, bills. Finished. For deposit, you have saving account, term deposit, recurring. Finished. And then each bank, on the basis of these 3 basic products, draws innovative nomenclatures and facilitations. Across the globe, it is the same story. India is a little bit different. For example, if we talk of India, we wanted to ensure that our economy grows, and we had a huge population below poverty line. So the Indian banks were forced to do what is popularly known as priority sector lending. You compare this with US, they don't have priority sector lending. They have only cash loans and demand loans and term loans, period. Matter ends. So it's a country specific thing that we need to do. For example, if you want your banking industry to drive to a particular activity, particular population, you can devise a regulatory mechanism where the resources are channelized. Yesterday, our Home Minister made an announcement that the cooperative banks are not doing agricultural credit. The cooperative bank should do 10 lakh crores of agricultural credit during the year. Channelizing, forcing the cooperative banks to do agricultural lending, which hitherto they have not been doing. Because there is the mainstream banking which is handling the agricultural credit. So the urban cooperative bank as a sector was not paying any attention. This is the story after 75 years of our independence. Why I am pained to tell you this? Because for 75 years, we do not have a diverted policy. Now we are trying to do that. After learning and experimenting with several options, we are trying to do that. Too often products have been designed for this needs of wealthier urban Hindi and English speaking populations, effectively excluding large swaths of the market opportunity in rural areas. That is one of the thorns in the India's initiative. This will be with you also. This is with every country. They still like cash because they don't want to pay tax. and since they don't want to pay tax, that is the main hurdle into the digital financial inclusion. Okay, so they want cash based system, either give and take straight away, no accounting, no responsibility. This is one more area which I feel that the product design is required with linkages between digital payments and financial inclusion. While great progress has been made on the access of financial services, the relatively low levels of usage hints at a disconnect. This is an India story. This is what is happening in India. I am sharing this with you with this reason that if you can plan to avoid this, you need to do that. And it will start with a huge campaign in your country at the bottom line. Yeah, we'll break for tea, no problem. We'll break for tea and continue with the presentation subsequently, right? Yeah.
Okay.